Hi guys, this is Greg McLeod from Elite Traders University and the Forex Cash Machine, Forex Market Timers. So glad to be with you here today, and I wanted to share with you how to draw areas of support and resistance and reading charts. So I'm going to start with when I first started trading, I didn't use charts. There was just guys that came on TV in LA. The station KWHY, and they would have these cards, and they would write on the cards, oh, you can buy so many thousand bushels of soybeans or so many gallons of heating oil. And so they advertise these seasonal trades. So a lot of my first trades were based on hot tips. I took a newsletter, some commodities newsletter that came by fax. So I'll tell you how long ago this stuff was, and I never really learned how to, I came up lucky. Sometimes those guys were right, sometimes they were wrong, but I had no clue why they went long, why they said go short, or anything. All I did was do what they said, and sometimes I made money, sometimes I didn't. But I wanted to be in control of my destiny. I wanted to know what those guys knew. Why did they come up with those suggestions? Why did they say buy soybeans? Why did they say sell this or that? Whether they were right or wrong, I wanted to know why. And there was very few things on TV. There was one guy that used to come on, and forgot what his name was, but he would draw these charts and have these candlesticks up, and I thought, man, that looks really cool. So you could look at past data and be able to forecast where price is going to go. So that's where I start my journey, going to libraries, buying books, getting DVDs, cassettes, VHS. Not even, Traders Library used to sell. There was a company called Traders Library that sold VHS cassettes of different trading workshops, and I would buy those. And in fact, I got a stack of them in a container, and I actually do have a VHS player that I keep specifically so I can watch those old videos. But so once I learned how to read a chart, that's where the money started I started becoming a little bit more consistent, right? So I had enough knowledge to become dangerous, but really not enough to actually be consistent. I just could see graphically where I was wrong and where I was right. I would buy, it would drop, and it would sell, and it would go up, right? Saying, many of you probably still have that problem. But I did learn, there was a guy by the name of Robert Deal, Deel, and I went to a conference in Monrovia. That's where he's based out of. And he was like, and he had a class on charting. I just remember he said you got to have lots of data. You have to have daily data. You have to fill your screen with as many bars as possible, because market has a memory, price has a memory. So not this, so I was looking at that little fragment. You can see as I back out for more and more data, as much data that I can get on my screen, and that's why I don't phone trade too much unless I've got a really good setup. So right now we have about 8 years of data of the British pound versus the US dollar. 8 years from 2013 to 2021. And we can see lots of little squiggly lines. Each bar represents 1 day of activity. And each bar is composed of a high, a low, and a close. So there's 3 parts of price. The open is where the price starts. The close is where it ends. The high is the high of the day. The low is the low of the day. So that's how we plot price. And each day, these candles represent bulls and bears. Now, they don't come red and green. You can make them any color you want, but I like red for selling and green for buying. Green is go, red means stop, red is losing, green is gaining. So you can use any color you want, but I use red candles to represent bearish movement, green candles to represent bullish movement. And I know that some people are on MT4, they like blue because on the phone, blue is also a positive color, right? But let's keep it simple. So first of all, you want to get as much data as possible on your screen, right? And I like even going farther back, not even the daily, go back to a weekly. You want to go back to a weekly, get a lot more data. Look at that. And at one time, I remember trading, the pound was on this tear, just going up, and it topped out around 2.1189, right? So that's the high, the absolute high. The high, and actually it's a 15-year high, right? And you can also say, hey, we've had a 15-year low, right? Down to 114. That's recently, that's the pandemic low, about in March, right? So basically, as far as the data we have is 1993. I think on MT4 I can actually load up into the 70s. So it's pretty wild. Even though some of these currencies, like the euro, did not exist, they did exist as the European currency unit. That's another topic. But 1993, we were in a from 114 to 211, 707, so about 1,000 pip range. We really haven't gone anywhere. If we were to look back, even if you went back 50 years, we really have not gone. 2 is about the highest, 220, maybe if we go back to the 40s or so. And this is probably the lowest of the low. So basically, we've been in a range for the past, say 26 years that we can see. And so these peaks represent areas of resistance. So and the bottoms represent areas of support, right? Areas of support. And those areas of support start to stack. And so these little curves, these inflections, these turning points represent support and resistance. If we just do here, you'll see right before your eyes, like magic, how these areas of resistance wind up showing up again in the future. So we're just looking at price action. I'm just putting any type of a top wick. I'm going to put, this is called classic support and resistance. It's very tedious. It's, I used to do it with a ruler and a pencil on a graph paper. And so, a charting package like this would have cost, $300 or $400 a month. TradingView's actually a bargain for $300 for the entire year. I used to have it deducted from my trading account to pay for when they start having charts. And sometimes the price of the charts is more than I made that month. So this is a real luxury. You trade it in the 80s and 90s, you just really appreciate what you have here, right? And try to get all of them, because I know it looks messy, but this is a weekly. When we drop down into a 4-hour chart, these lines will space out because these are huge amounts of pips. 139 to 140. This little space between these two lines is 200 pips, right? And so we superimpose these long range classic support and resistance. This is called classic support and resistance. We're just taking the tops of the range, and then what will happen is when we span this out, and then there may be some that we missed and we can fill them in. And again, I'm just looking at this area here. What will happen is you'll see that price strikes these areas over and over again and turn. As Robert Deal says, market has a memory, right? So market has a memory. It has anniversary dates. So like 9/11, or the crash, the 29 crash, or the 87 crash. October 4th, or the first week of October, market crashed down. This is where we got outside the range, right? But bam, we hit that line. That line was created way back here. But we hit that line years ago. And I need to find a magnifying glass. Oh, weekly. Okay, so that's our weekly. And more lines are coming in. Let me add some more. This is 2006, so we broke out of the range and back there, so we can just add the remainder here. Okay, and I would save this because these lines will not change very much, because it will go, and I'll show you a different way of doing this, where you can use Fibonacci on a longer time frame. That's another way of doing that. But I always wanted to show you how the old school way, because I'm old, and and you'll get this, you'll learn the way it used to be done, and it'll be an edge because you're going to see areas of support and resistance that other people are not seeing, and you're getting out and taking profit when others are, putting the pedal to the metal and getting crushed, right? So we've got those areas. Again, it may look messy, and I just want to see if we're, and this is where we finally broke. Look how big that candle is, and this was an air gap where price just filled this gap of space, and we're in a new area that was not explored previously. So now we can add, we can actually see that there's something that happened here in 2016. An election, perhaps, maybe. And then we started to recover after the initial shock of the Hillary Clinton losing and then Trump winning. The uncertainty caused it to drop, and then things started to reverse the other way to a really big bull rally. Okay. We got a little wick right there, and even if it's close, I'll go ahead and put the wick. I'll go ahead and label the wick. And now we're in this range, and look, we came down and broke to a new low, and this is where we are right now. Okay, so we've got this covered, and I'd like to save this. We can. Move this out of the way. Like it should be like something like save workspaces or something. Because you hate to do all this stuff. You want to do it once. Because I had it drawn out, a while ago. And bulls versus bears. I used to do the show for my brokerage I used to work at, and I used to do this online show. And I had all these lines, and I have the same account, so I don't know why it disappeared. But anyway, so now we have our areas of. And you might find a wick, as you look at the market, you'll see, oh, I missed this one here, and I might add one here. There's some there, right? And you'll say, okay, once we got most of them in, we got a goodly amount in, right? We have a goodly amount of support and resistance levels identified on the higher time frame, all the way back to the 1990s. Okay, so we just did that in 14 minutes, right? So what's now? Well, now we can drop down to time frame. We can drop down to a daily, and then we can spread this out a bit. And now we can see how these levels are being respected, even as we speak. How we rallied right into an old level, and then price dropped. Again, these levels coming back. But what happens? You'll see new wicks coming in, and these are like daily lows and things like that. And if you want to get really, granular. You can make another color for dailies and make them purple or green or another color, and then you can come in on these. But these weeklies are pretty good because they're not really gonna, we break out here, we've got areas of resistance. I mean, it's like an air gap. There's no price action that's happened here for years, right? So now you can go back here and go down to your 4-hour chart. Now this gets really tasty, right? Now we're in the world, like saying, Greg, that weekly stuff, man, that's really something. But and you can see this weekly level was broken, price came right back. So this tells you this is pretty bullish, right? And then we can go and we can draw our trend lines now. We can draw our trend lines along the lows, right? We got 2 points, create a line. That's Geometry 101. And then what we can do is project that into the future, right? Boom. And it projected, and then we got a break. Ideally, you would like to have it come down to a weekly line. This is a formidable support area on this time frame, right? On this daily, the 4-hour, and then 4-hour supports are pretty interesting too. You can draw support lines here. You can see that if I take a support line, a horizontal line, and just go across all of this price action here, we've tested this multiple times. I'm gonna make it a different color, just so maybe orange. And so now we have a little bit of coordination here. I'm going to get rid of my extended line here. Settings, take the extension off. Okay, so now we are bouncing from this level of support. And it looks pretty interesting. Where we're bouncing right there on this 4-hour chart. On the 4-hour chart, we can go down in time frame, down to an hour, and we can see we're getting a little bit of a bounce here. So I'm going to paper trade this. So let's say we go ahead and I'm going to take profit and stop loss. So we can, this is a rising trend line, price will probably maybe rally up to a trend line. And then we have our stop just below the swing lows there, maybe 4 or 5 pips below that. We have this support area here. This is how we use. Now, a better trade, if we could have tagged a weekly line, and price bounced from one of these lines, that would give us a tremendous buy opportunity. The older the support or resistance, then the more there's more data points. It's statistically more strong than shorter time frame support and resistance, right? So though I like scalping on the shorter time frames, I like finding weekly support and resistance, or even monthly support and resistance, or weekly pivots, longer time frame support and resistance, but then use short-term entries at those levels. Because now here, this is a weekly level, and you say, well, Greg, this can cut right through it. Boom. It didn't reach the other level and fished around for a bit, but then it came back up. So this is an hourly chart, and the moment this thing came back up for air above this weekly line, this was a tremendous move, right? So if you got long here on the break and place a stop below the last swing lows, well then what do we have? We have quite a bit of juice, you know, about 112 pips from that bounce. Now we didn't quite get to the old weekly high, right? We did not get there. But if we were to draw a trend line and we were riding that trend line and that broke, that would be an opportunity to take profit. Or move sideways for several hours, then that would have been a good place to take profit, right? And since we were so close to this weekly area, sometimes this is like a zone. So we may not get exactly to the line, but if it gets, you know, partial way to target, it's better than going to Walmart, right? So take your profit, get a trend line break, and this trend line is drawn a little wonky because you never want to draw through candles unless we're changing direction. So this is going to draw through a candle, but it's changing direction. And we get short on that break and look for a return to congestion area, which is an old level support. And we bounced right off that level, which is more of a daily level. And then price consolidated along that line, just like it consolidated here and back here. So you can see the area of support. We're just playing Pong, guys. So if you've played Pong, yeah, then you know how to trade support and resistance. This is your area right there, right? And we're ponging right now. So, and we wick below and we came back above. So I got a long here and at my stop, and you know, price seems to be making lower highs. So I'm not trying to get back there to the old high. I think we might get to the trend line where this bounced. We got a lower high, and I'm looking for a price maybe to get back to that trend line. And this is drawing through. I'm going to remove this. And so let's see if we get some nice action, price action moving up. So I hope this helps. And you know, you can even go to a lower time frame. You go to a 15-minute. And just think, if we have a 15-minute touch, well, look, your risk to reward is very small, right? Even if it broke here, retested from the backside and dropped, was a possible short. And then we see a weekly level where it was tested 1, 2, 3 times. 4th time we have a breakout, and it took out 1, 2, 3 weekly levels before forming a head and shoulders. And then you can just see a number of opportunities at levels that were drawn years ago, right? If we were looking, you know, if we were drawing these lines back in the 90s where I showed you, they project all the way out here into the future. You can see where we had a test, a bounce, and a rally, right? A test, a bounce, and a drop. A double bottom that did not quite get to the old weekly line, but then broke and then retested, right? So you can have very good risk to reward on something like this, where you can enter on a break, place your stop below the weekly low, and then take your profit at the next weekly high, right? So now you have a fantastic way of gauging the market. Now, this is just a very general, 50,000 foot view of trading. If you're part of Elite Traders University, you would know how to actually get in there and really target smaller time frames to get some razor entries with very little pullback. But this is a good start for you, so you can stop doing what you're doing, or maybe you don't even know what you're doing. Okay, he's like, how can I stop, Greg? I'm not even doing anything. Well, this video should help you. Support and resistance is the core fundamental of any type of business enterprise, right? We always want to buy low and sell high. Whether it's real estate, a pair of shoes, or a car, you want to buy at the lowest price and sell at the highest price. And that low price is defined by support, and the higher price is defined as resistance. I don't want to pay more than that. So guess what? Other people didn't want to pay more than that either, right? And so they stopped buying. Buyers want to strike, and people start selling this. So if you think in terms of how you buy things, you never want to pay full price for anything. You're always looking for a deal, right? But you get FOMO and you see it rising, you're not getting the deal. You're paying too much. So your best prices happen near support to go long. Your best price to sell happen near resistance. And this is like a market map, a treasure map for finding powerful trading opportunities. If you enjoyed this video and learned something from it, well, post an example. Show me what you've learned, and show me a trade using this methodology. And I look forward to coaching you on the other side. Talk to you later. It's Greg McLeod from the Elite Traders University and the Forex Cash Machine. Signing off. Peace and pips.